The market is in for decades of pain up ahead. Those are the words of my guest today, Dave Collum, as he believes massive overvaluation based on AI hopes and dreams is going to come to an abrupt end. And when it does, the reversion to the mean will be violent. And because this is a Dave Collum episode, we also dive into Satanism and its links to MK Ultra and the CIA, as well as a lot of conspiratorial topics near the end of the interview. And guys, the first Commodity Culture Bootcamp is coming up this Saturday, June 27th at 1 p.m. Eastern Time. I have greatly outperformed the S&P 500 with my personal portfolio on a per annum basis since 2021. I'm going to show you how I did this and break down my view on the commodity space and what's coming up ahead. Join.jesseday.ca, links in the description. And now, Dave Collum. Dave Collum, great to have you back on Commodity Culture. I want to start things off with the SpaceX IPO because this feels like peak bubble territory to me. This is a company that recorded over a $4 billion net loss last quarter, yet it feels like both retail and institutional investors were piling into this thing. Is this peak bubble territory in your view, or is this just part of the new paradigm where valuations, intrinsic value no longer really matters?
That's a rhetorical question, right? It is the word complacency. I actually called it the complacency bubble when I wrote about it. And actually I asked Grok, and Grok gives me credit for that nomenclature, so I'm taking it. Everyone knows it's a bubble. That's not totally true. My Twitter feed is filled with retarded comments about SpaceX now. And one person said that I was naive because everyone uses forward earnings and I'm not doing it. And therefore I'm obviously an amateur, which I am. Well, not true, because I do it to make money. And so SpaceX is trading at not only a $4 billion loss, which Exxon has periods where there's losses. So it's trading at 100 times sales, which is 10 Scott McNeely's, right? He said 10x sales, and asked rhetorically, what were investors thinking, testifying to Congress about the dot-com bubble. And so 100 times sales is, forward-looking 2055 earnings, if anything. Some people think SpaceX will go bankrupt, but I don't, because it's a Department of Defense company, basically. And so they won't let it go. And if they do somehow earn a ton, it's going to be on the taxpayers' back. So
is this peak bubble territory, do you think? I mean, we've been talking about this market in terms of how overvalued it is for a couple years now. And of course, the old adage of markets can remain irrational longer than we can all remain solvent seems to be holding true. But of course, you have people out there who say this is a paradigm shift. This is now how we value companies. You talked about forward earnings.
Yeah, those people are stupid. For those listening who agree with that idea, they're stupid. They're stupid because they're overlooking an obvious thing. And I hate to sound arrogant at this point, but I'm so fed up with these bastards. We have a case Shiller PE of 42. The average for 110 years was 15. Every other metric is about the same, 200% over historical valuation. So if you want to say that this is a new paradigm, you also have to say that we're going to get 1/3 the returns from this level too in perpetuity. And I don't think you want that either. People who think that this is a pioneering new technology are ignoring that we invented railroads and electricity and cars and airplanes and the internet and fire and you name it. And I don't think it's that pioneering in the sense that I'm not even sure it's good news. Let's put it that way. But it is pioneering. I'll give it pioneering. And as Gundlach said, electricity was pioneering, and electricity companies went wild, as you can imagine. Once electricity started to hit the street, and it turns out the electricity companies peaked in 1911. So they were forward looking by 50 years too. I've never called a crash. I've begged podcasters not to say Collum calls a big crash. I've never called a crash. I think we're going to have a multi-decade awfulness. And I have no idea what path we're going to follow, but crashes don't fix anything because dip buyers show up. I did, however, about a month ago, said exactly that. And I said, but if I were to call a crash, I'd call the SpaceX IPO as the top.
Do you think we could see more government intervention directly in the stock market? Because obviously we've seen over the years central bank intervention when it comes to the bond market, Japan probably being the poster child of that. But the US government has now taken a stake in Intel. They're talking about potentially taking a stake in other big tech companies. The Trump administration seems very focused on the broad market and how high it is as a barometer of the overall economy and of how well they're doing. Do you think we could be entering a world where we start to see the government take more direct stakes in companies?
Yeah, we call it
on the big indices?
we call it communism. It's that simple. This is not capitalism. When the government owns businesses, it's called communism. Right? Do you really want people in the government deciding how to invest capex and things like that? No chance. One thing we know is that the people who work for the government largely are morons. So. And as soon as it gets politicized, you mix politics and science together, and you get politics. You don't get science. And so yeah, the buying Intel. I could imagine the government taking a stake in something that is so strategically important. But one of the problems, someone said this, was a book by a guy named Sharma. And he basically, the title is something about what happened to capitalism. And he points out that we flood the market with money, which is a terrible idea because one of the things about capital is that a restricted amount of capital available to the free market serves as a moat for legitimate businessmen. So if you're a legitimate person, you have legitimate ideas and you can make your case and you can get capital, and the nitwit who's a fly-by-nighter who's going to burn through capital and destroy it, like private equity, then if it's hard to get capital, good ideas still get funded and bad ideas don't, because people start restricting how they allocate it. And we've gone through 40 years of just increasingly unrestricted capital creation from the central banks. And as a consequence, private equity can destroy viable companies, gut them of their assets, jack up prices, jack up payments themselves, and sell the shell of this broken company into the open market, because there's idiots out there who will buy it. They're dumping them on suckers, they're dumping them on pension funds, or dumping them on, right? These guys are amateurs, right? The guys running the Kentucky pension fund don't know what they're doing, right? And as a consequence of that, that means monetary policy is too loose. If you can buy a company and destroy it and make money, monetary policy is too loose. That there should not be enough capital slopping around the system to make that a profitable thing. So this SpaceX, all these things we're observing, private credit markets, everything is a sign of a broken system, in my opinion. I'm a little grumpy this morning.
Commodity Culture is hosting our first live boot camp Saturday, June 27th at 1 p.m. Eastern Time. We're going to take an in-depth look inside my portfolio, A to Z, what I own, why I own it, what I'm buying, what I'm selling, and the framework through which I'm viewing the commodities sector right now as geopolitical instability, global conflict, rampant inflation, and central bank money printing continues to ramp up. Natural resources will be the winner in the years ahead. I'm going to explain why, share the greatest insights I've absorbed from all the guests on this program, and so much more. So join me for the Commodity Crisis Playbook Bootcamp, Saturday, June 27th at 1 p.m. Eastern Time. Sign up using the link in the description below. You know, you mentioned complacency, and one area where complacency seems to have taken hold of the market is the Iran war. I mean, the market's just registering business as usual. The indices hit all-time highs, I believe. Well, you know, the war is technically not over yet. We're starting to see signs that perhaps these peace talks are advancing and that things are going to be all good. I mean, to the extent of what all good is at this point. There's a lot of things which happen which cannot be reversed, including the destruction of the Las Rafan natural gas supplies, including the closure of the Strait of Hormuz and all the after effects of that. But do you think we could see, perhaps in the aftermath of a peace deal being finalized, further jubilation, the feeling that all is good again? And in that area, do you think that could be when Mr. Market finally starts to price in reality?
Well, you got four engines on fire. You're at 35,000 feet. You can take it to 45,000 if you want, but you are going to find the ground eventually. So I think whatever you get from here is going to be given back en route to giving back what you got last year and the year before and the year before that and the year before that. I actually, my base case, this is going to shock people. My base case is that we are going to hit on an inflation adjusted basis the 2000 high. That's my base case. And because we've done that historically, we've done that about 4 or 5 times in the 20th century, where the 29 high, we returned to exactly the same price, inflation adjusted, in 1981. 1906 high, did it. 45 to 75 years later, you end up at exactly the same price, which means you treaded water for as little as a half a century and as much as 3/4 of a century, which the only gains you got were dividends. Now, people say, well, we don't care about dividends anymore. I said, oh, therefore you'll get nothing. That's all, that's it, right? So yeah, okay, you better care about dividends because that's all you're going to get, in my opinion. By the way, back in the first half of the 20th century, they're 4 to 6%. They're now zero, essentially. And so they're within a rounding error of it. And so that's another valuation metric, by the way. So let's say dividends are 1%, and they average 4.4% over the 20th century. One could argue that means we're 300% over historical average valuation. It's another metric. So no, I don't think so. Well, I think so. I think you're right. I think here's what I think might have happened. I think we were rolling over. I think the markets were really trying to roll over. You know how you listen to guys like Paul Tudor Jones and stuff, and they say that we were about to go into a big mess, and then AI showed up, and all of a sudden this huge amount of investment. By the way, our entire GDP now is AI. Someone explained to me why that's good news, right? Building data centers and buying servers, that's our GDP growth? That's insanity. That's insanity. And it's like, you know, if I spend $1 million building a gas station, I haven't made a penny. I've just gone deeply into debt. I don't make money until I start selling gas. And the AI companies aren't going to make money until they start somehow selling their product. Right now, no one knows how they're going to do that. And my guess is that that will occur after the bust, when people are buying up these AI companies for pennies on the dollar, these data centers, you know, and unlike building railroads and highways and things like that, the AI data centers have a extraordinary depreciation rate. They they consume energy and will continue to consume it in perpetuity unless something wildly unanticipated happens. And so you're, you know, they're building AI data centers that consume one out west in Indiana. I think this is going to consume 1 million households worth of energy, right? Every year. You have to pay for that just to break even on your energy costs, let alone all the other crap, all the depreciation of your assets, which servers, right? Servers don't have a big shelf life. They don't, you don't build them and then use them for the next 100 years. And, so no, the AI boom is going to bust. The problem is we've got a real estate bubble, and I'm scheduled to do a podcast with Melody, right? And she'll tell me about how awful the real estate market is. And the equity market, the general equity markets are way overpriced. And I think what happened, here's what I think happened. The Iran war starts, and I rarely turn to this explanation, but I think what we got was what's called a gamma squeeze. And I know you know what it is, but a gamma squeeze is where banks or financial institutions sell call options. And so you sell call options because the market's getting frothy and all of a sudden people want to take a leverage bet. And so you sell them a call option. Now, these financial institutions don't want to be exposed to that. And so what they do to hedge their sale of a call option is they buy the shares, which then drives the shares up, which then pays the call options, right? It's a virtuous cycle. It's like a short squeeze, except for the fact that a short squeeze occurs after the market has plummeted. This thing's occurring at the top. Now, what do you think happened? We entered a war that looked like it could be truly catastrophic, with everything else in the world being a mess too. And all of a sudden the markets took off on a all-time record run. And what I think it was a gamma squeeze, and I think the call option buying was probably federally sponsored. So if you know you can generate a gamma squeeze, then a price-insensitive buyer of call options can drive the markets up. And I rarely invoke that, because that's kind of that's a kind of a fallback position for someone who wants to understand markets, when in fact I'm not sure they're understandable. But it looks to me like someone said, we can't have the markets tanking during this Iran war. Just like when the president speaks, the markets don't tank. And when the head of the Federal Reserve speaks, the markets don't tank. Because somewhere way back when George Bush was giving a speech, George Bush Jr., and the chyron below him was showing the markets tanking, someone came out of that and said, never let that happen again. And so what happens is, and if you know that's what's going to happen, then they don't even need to rig the market, because everyone just goes long anyways. Once you know, look, we're going to protect it. So, and that's like when it's like when the Fed say we're going to buy commercial paper, and so everyone buys commercial paper. Now the Feds don't have to buy commercial paper. So it's a big ruse. But at some point, regression of the mean is a force of nature. There's never been an overpriced market that didn't find its way back to zero, back to fair value or lower. And the trip down is going to be so painful, because we're already pissed off as a society, right? We're pretty mad about everything. And we're at the top, or should I say we're nearer the top than we are a bottom. How's that? You take away 70% of some guy's retirement fund and tell me what he's going to be saying online, right? He's going to be squealing like a pig. And the boomers are not playing enough defense. They absolutely. I was talking to a boomer friend of mine who owned a structural engineering company. He was the CEO and founder of it, and he's 95% exposed to equities. And so about 2 Fridays ago, there was a bad Friday. It was like a 4% drop, and he was shitting a brick. And I'm going, "Oh, you are in so much trouble. If a 4% drop sends your emotional state into a tailspin, you should not be in this market." Right?
Yeah, I remember that day. I think the NASDAQ fell just over 4, and commodities took a massive hit that day. Yeah, I know. Yeah. That's the funny thing. Where my friend was messaging me because he knows I host the show. What's going on? I'm like, things are going down today. That happens sometimes. I know you're not, because he's kind of a newer investor.
More enthusiastic sellers than buyers.
Yeah. Yeah. Now,
same number of buyers and sellers, though. Same number.
I want to talk about gold and silver for a moment here, because both of these metals took a bit of a hit in the aftermath of the Iran war, largely been trending sideways since then. I've heard different opinions on this, because some people believed, that the safe haven aspect of precious metals should have kicked in and prices should have gone higher in the face of war. Other people say, no, a lot of countries, Turkey is one example, has to sell a lot of their gold to get dollar liquidity so they can then buy energy because of the closure of the Strait of Hormuz. So I'm hearing various opinions on this. I'm wondering what yours are and how you see both metals performing up ahead.
Well, this is where I go the other direction. My profound levels of confidence as an organic chemist. Right? Here's my favorite investment advice: do not take advice from an organic chemist. I don't have any idea what the metals are doing, and I think that's the easiest explanation. On Turkey, so 130 tons of gold, but someone bought it. Right. So there's always a buyer. Someone wanted it. And so the idea that various countries needed capital to buy oil sounds good, except for the fact that there's no evidence that's the explanation that I can find. Now, there might, some guy like Mike Oliver is one of the most respected technical analysts out there, might know what's happening. I do not. The fact that it hasn't gotten clobbered worse is probably good news if that's the model. I'm still waiting to say, everyone said when the Strait of Hormuz was closed, it was going to be catastrophic. I'm still waiting for proof of that. Not that it doesn't make sense, but here's what I'll tell you. Here's my background. I studied an area of chemistry that was profoundly complicated. No one else seemed to want to touch it. Some said you'll never figure it out. Some thought they understood it already. Neither was true. And there were so many times, I'd say 90% of the papers I published showed someone was full of shit. And what I learned over the years was just because something makes sense doesn't mean it's right. And the models that people were using, which some were profoundly off. Some Nobel Prize winning crap was profoundly off. It made so much sense, but it wasn't true. And then what I always invariably found is when we dug into it and we would study it and we would actually get the answer, I go, that makes sense. And I personally now don't know why people thought the way they did. Although I didn't necessarily see it coming. We just happened to dig into the actual facts. And so because a model sounds good doesn't make it true. It just sounds good. And there must be people who know, but I try not to read articles by people who say this is what's going to happen. Although I just spent a rant saying at some point in the unknowable future, the markets are going to regress to the mean. That's like saying at some point, California is going to have an earthquake. Maybe it won't. But if you could go to Vegas and make bets, and you could take an unlimited, if you could take an unlimited put option on there being an earthquake in California and a regression to the mean of the markets, you'd probably make a lot of money in Vegas on bets like that.
Yeah, some interesting thoughts. But what given all of the issues we've talked about in terms of the monetary debasement, government corruption, insider trading probably happening. All of the net worth of US politicians alone kind of tells the story. It feels like there's kind of a loot the system moment happening where everybody's kind of trying to grab whatever they can before the whole thing collapses. In this sort of scenario, do you think over the long run, gold is going to ultimately do what it traditionally has done and act as a way to protect purchasing power and protect against the effects of inflation?
Yeah, gold, they talk about gold buying a good suit, an ounce of gold can buy a good suit. The problem is suits vary, and so you don't know what to do with that. A better metric, by the way, which something that hasn't changed at all, really, is that gold is also said to buy a month's worth of manual labor. And it bought it, an ounce of gold bought it in Roman times and it buys it now. So in that sense, long-term gold appears to be the perfect hedge. Short term, it's going to jump all over the place. So so people who say it's not gold going up or down, it's the dollar going down. I go, no, it's not. So if gold drops 10% next week, I go to the grocery store. The prices of the groceries are not going to change 10% next week. Everything's denominated in dollars, not gold. At some point they may, but I don't understand why the dollar reserve currency survives. Why can't you have a basket of currencies and computers telling you what the price is worth? Why have one currency to trade oil in, and I just don't understand why. And I'm guessing that game's coming to an end. Probably started when we confiscated Russia's assets, and the rest of the world said, "Oh my God, the U.S. is not dependable." And so they started going into gold, which is when the 2022 sort of leg up started. And I don't think there's any reason whatsoever to trust us more now, because we did bomb the shit out of Iran. And I really feel strongly about that being a terrible idea. And so my next podcast, by the way, as you know, I'm doing a marathon today, is with Joe Kent. I'm going to find out what he thinks. What he thinks is going on underneath the surface. I'm hoping to get in some questions that others are not asking him.
That's awesome. I look forward to watching that. There's so much happening right now on the global stage when it comes to geopolitics. What are you watching right now that you think more people should be paying attention to? And as an aside, do you allow geopolitical events to influence your own investing decisions, or do you just consider that kind of noise in the background?
Geopolitical consequences. One of the things that baffled me for years is I've always wondered how you run an economy, how an economy functions in a wartime. So you're in the middle of World War II. How's the French economy running? How's but the free market has a way of achieving that, right? There's a lot of starvation which can't be solved, so to me, geopolitical events, you got to distinguish from causality and a trigger. And so a trigger is something that when a very poorly priced market runs into a trigger, that's when the shit hits the fan. The trigger's not the cause. It's like if you have a forest fire, right? If you lit a match, the match didn't burn down the forest. The forest burned itself down, but the match was the trigger. If the forest was wet, the match wouldn't have burned down the forest. And so when you're displaced from equilibrium, this is what physical science teaches you. The further you are displaced from equilibrium, which is a valuation and all sorts of things that are being pumped way out of whack, then where you look at it, you go, that just doesn't make sense doing what it's doing, right? The return to equilibrium is violent when you get way out of whack, whether it's an avalanche, an explosive, an earthquake. If California hasn't had an earthquake for 100 years, the next one's going to be a killer, right? And volcanoes, you name it, and world wars, right? And so we should never be happy about a system about the markets getting far from equilibrium. We'd be much better off if the markets would sincerely correct. And a correction is not dropping 20% and then bouncing back in a year. That corrects nothing. That just damages investors' perception of reality. So if the markets are twofold overvaluation, a correction takes 50% off and doesn't give it back. That's a correction. I get in arguments with Tom McClellan, and he says, no, a correction is just a counter trend move. And I go, okay, that's your definition. But to me, the word correction, has implicit in it fixing something. And if you go down 20% and bounce back 20%, what have you fixed? You've damaged investors' perception of reality, is what you've done. You've made it worse because they say, okay, I've got the message now. Never sell. Overvalued markets are never a problem. The markets for 45 years, right? You know this. I've said this before in your show. The markets, because of all the tailwinds starting in 1981, because of demographics and China and Russia and you name it, the markets, the valuation of the markets, which should go up and down with sentiment, but they shouldn't trend. Unless you want to argue that returns are going to trend. So if you want to let it go to 40 PE, that's fine, but then your return's going to suck. So the valuation shouldn't trend because it's the price divided by something it should track. And it tracks it inefficiently, but it tracks it. The market's compounded 4% a year for 45 years annualized. The valuations, that's ridiculous. I believe that at some level, and probably the most important contribution there, besides, dropping interest rates for 45 years too, is the boomer demographics. The boomers were going to create a boom. That's why they call them boomers, for starters, probably, right? It's a baby boom. It was a demographic boom. We hit the workplace, our wives hit the workplace. Everything was going to boom, period. If I understood demographics back then, just Hail Mary, go long, never look back, because the boomers are going to boom. And now that's over. And I don't know when it's going to officially be over. But I do know that if you're a boomer and you're not playing defense at this point, if you've got enough money, don't get greedy now, because you're not going to have enough money if you do, in my opinion. And people say you're a stop clock. Stop clock. I now admit I'm a stop clock. But if when the clock is right, your entire house blows up, you are going to pay attention to what time it is.
Absolutely. I want to discuss Western governments moving forward with restricting internet access, establishing hate speech laws, and ramping up surveillance state type behavior. Obviously, at this point, the UK is the poster child for this. I believe Canada,
Oh my
yeah,
God.
it's
Oh my
insane. And
God.
I believe Canada's up next because right now they're full speed ahead, ramming through these different bills, Bill C-22, Bill C-9, all these different kind of surveillance slash anti-hate speech laws. So I think we will start to see those posts on social media of Canadian police showing up at people's doors because they posted some anti-immigration, tweet or whatever. Um, Germany, France, Australia. I mean, a lot of these governments seem to be moving in lockstep. Do you think they're coordinating with each other, or that there is a group of people behind the scenes who's giving them orders? And what's the end game here? Total digital slavery, or something else?
I was I'm in a Zoom group, which I rarely go to because their topics haven't been catching my attention, but they were phenomenal for a while. And there's a guy in there one day was started talking about Hegelian philosophy. And at first I thought he was going off the rails. I didn't know who he was. And then someone finally interrupted him and said, "Are you a professor of philosophy or something?" He said, "No, I'm trained as a lawyer, but I work for the NSA." And it turns out in a book I was reading, after I read that he was the Pentagon's #1 radical terrorist expert.
Wow.
And he said something that was, yeah, I'm going, oh, this guy really is impressive. In the Zoom group also had Tony Shaffer, who's a famous spook and stuff like that. So this guy said, he said, first of all, he said something profound that I've expanded to include more than what he said, but what he said was profound. He says, I don't like to name names like, Bill Gates caused the vaccine, the virus, because he said, because then you'll think you understand it and you'll stop thinking. And I expanded that to never draw a conclusion that gets you to stop thinking. So when you call the political system the uniparty, it's a way of throwing up your hands and stop thinking. And so avoid conclusions that cause you to stop thinking. Now, so he also said he thinks of it as a self-assembled oligarchy, which is basically a bunch of powerful guys who have common interests. Think NATO, maybe, right? Common interests, which I'm not a big fan of NATO now. And I immediately had an image of a starling murmuration or a school of fish or something where there's no fish leading the school, but they're masterfully organized and so it's possibly that simple. So it's not like they know each other and get together wearing hoods and do stuff, although I think there is that. And I'm a big believer that men and women of wealth and power conspire. And if you don't, you're really pretty retarded because they always do, they always have, they always will. My darkest theory on all this is that when the internet went live, we might have set ourselves on a course for authoritarianism. I think one of the problems we have is in the olden days when it was the masses versus the elites, the battles were fought with weapons. And the problem the elites had was that the elites had to use the masses as their armies. And so they really were on a very fragile situation. The digital world is totally different than that. We don't have weapons against the elites at all. I don't know how. So if, for example, they decide that this podcast is inappropriate in a profound and dangerous way, they can debank me. And I don't know about you, but I have not figured out how to function in a world without a bank account. I don't know how I would do it. Where do you cash a check if you get a check? Who's going to cash the check for you? Well, so you have gold. Where are you going to, what are you going to do with the money? There's just things you can't do without a bank account. And they've debanked people. They have debanked people. And so, I was on a podcast with a guy. He's the first guy who's ever said this on a podcast. And I say it all the time to my brother. He says, where's the frontier justice? So some guy debanks me and my life is over. I'm taking him to the light with me. Okay, that's it. I'm going to find the guy who made my life miserable. I'll leave a manifesto so that the next person say, maybe I won't debank anyone. Maybe that was a bad idea, right? I would do it for society. There was a cop in the LA Police Department who declared war against the LA Police Department for its corruption. And he wrote a manifesto, and it was brilliant, actually. And it wasn't, what you learn from it, the guy wasn't a loner. He wasn't imbalanced. He just said, I've had enough. There's just too much corruption in this place. And he named good people and he named bad people. He said, these guys, they're good. This guy, he's bad. He ended up, of course, died in a flaming inferno of a fire in the house he holed up in because they didn't want him getting to court. But he took one for the team. Better make it count.
Yeah.
Better make it count.
Yeah. But before we wrap up, I just have one interesting question, which is maybe a philosophical one. Who's more evil, the politicians and the elite giving the orders, or the men and women in uniform who choose to follow and enforce these orders? And the reason I'm asking this is because a video has been circulating of an American who visited the UK, and he secretly filmed himself talking to groups of police about what their policy was. He approached them as if he was a dumb tourist and said, hey guys, I'm from America. I don't know how things work here. I've heard that you can get arrested for saying certain things. Is that true? And the cops basically completely confirmed everything. Well, oh yeah, you can't say racist things. Free speech has a limit. And then he pushed them as like, so what is racist? And they were like, certain derogatory things. And have you guys made arrests like this? Oh yeah, all the time. And the vibe I just got, there's a guy named Mark Passio. I'm getting out there. He's a very out there guy, ex-Satanist. He's done a lot of online kind of
ex-Satanist.
Yeah.
So by the way, my third podcast today in this podcast marathon turns out to be a victim of MK Ultra.
Wow.
Who I've wanted to talk to for about 2 years. Which I don't know if Satanism will come up in the discussion, but Satanism and the CIA and stuff are very intimately tied together, it turns out.
That's interesting.
And they are a self-assembled oligarchy.
And so who's more evil, the order followers or the ones who give the orders?
What you got to do if you want to understand history, one thing you should binge read a bunch of books. And boy, I'm going to have trouble coming up with the names. But the one, my favorite is a book by Eric Hoffer called The True Believer, written in 1953. And he talks about these movements and how they catch fire and what puts them out, what ends them, and how someone gets hold of the movement, moves it to a more benign form, that sort of thing. But the people you're talking about are the true believers. They are the ones who become indoctrinated. I find it hard to blame them. So it's the prison guard at Nuremberg, right? It's the prison guard at Auschwitz. There's a selection pressure so that the ones who can't act that way get called out anyway. So you're seeing a distilled version. Again, there's stupid laws. Like, for example, someone can squat in your apartment. They can move into your apartment while you're away and come back, and the laws protect them. I go, I am confident within an hour I could get that person out of there, and it wouldn't be pretty. But I'm confident that there's no chance that I would not waste my time with the legal system to get that guy squatting in my house. I would go find a gang and say, look, I'll give you a kilo of cocaine or something if you go take that guy out, period. Or I'll just go in myself and say, look, you're going to die. You got 20 minutes to get out of here, and then you're going to die. You can see that I'm starting to get a little wacky here, right? I think the law and order problem that I've written about many, many times. I thought it was subsiding, and it seems to have picked up again. That's what's troubling. The UK is a nightmare. The UK, as you said, it's just a case study, and we tend to think that they're just like us. They're not just like us, although we could become just like them. That's the risk. And so you should fight this. You should battle this with everything you got. So last year I got attacked by the Zionists for an innocuous statement, but I had the head of the JNS, there's pictures of him when Trump and stuff, called me a Holocaust denying Nazi. I never said anything like that. So I called him a pig fucking liar. And I chose pig carefully. And I said I said a bunch of things about him. But they are attempting to shut us down. So my disdain for Zionism at this point didn't exist 3 years ago. There was just nothing, and now it's there. Now I've had enough. I want those guys to go away.
Well, just to wrap it up with a bow, the guy Mark Passio I was talking about, he believes that the order followers are the most vile evil. And he's actually there's about 30 hours worth of him giving lectures on Satanism.
Well, the Satanism turns out to be serving a more important function. First of all, to understand Satanism, you have to understand it's a religion. And the minute it's like when Matt Taibbi was trying to understand the 08-09 crisis, and someone said to him, "You don't understand, this is not a financial problem, this is a crime problem." And Matt had also, bingo, it clicked. Satanism is a religion. As a consequence, it does things that religions do, and boy, the history of that's spectacular, right? What makes them so evil is that they oppose God, right? They go the other direction. And the most godly thing are children. And as a consequence, therefore, defiling a child is the most anti-God, pro-Satan thing you can do. And so you find these unbelievable horror stories. Now, where it gets complicated is that, that's not my wife. Where it gets complicated is that it's used as part of brainwashing technique. So it's an on-ramp to other things. And you find connections between Satanism, child trafficking, MK Ultra. These connections are inescapable if you dig into this. And I don't recommend anyone dig into this stuff because it's a miserable experience, which I've been doing for the last 3 years.
Yes, I can concur with that. I like digging into it, to be honest. I like to see just how evil humanity can be. And I'm trying to wrap my head around everything that's going on for real.
Here's the other shocking thing is almost every podcast host I ever talked to has gone down this rabbit hole.
Yeah.
And so you think, oh, I must be crazy. And then you find out that all these guys have all gone down it because they've had too many guests, too many people to sort of, open their Overton window on them.
Yeah, well, you're the only guest who I talk about this stuff with, to be honest, because mostly we talk about investing. But I'm going deep down the Freemason rabbit hole right now. We'll have to put that aside for another episode and get back to the markets. I know you got to run here, so just my final question of the day, based on everything we've discussed. Are there any areas of the market that you're currently seeing opportunity in, or would you be mostly in cash at this point, sitting on the sidelines, potentially waiting to take advantage of a large actual correction in the market?
Well, 2-year treasuries, I wouldn't go out 10. And I believe that the mistake I made in 08-09, I had a ton of cash. I was confident that at the bottom, which turned out to be at historical average valuation, it hit a K-Shiller PE of 15. And it stayed a little bit below that for about a month. And that's just my opinion. Grantham said that. Mark Spitznagel said that. Other people have noticed that. And so the markets never got cheap. I thought there would be another halving of the market. I call it the great halvening. And so I was waiting to really exploit, to buy assets when they were truly on fire sale prices. What I should have done was asked, instead of worrying about the direction of the market, I should have said, at these various valuations, how much exposure should I have to equities? And at fair value, I should have had some exposure to equities, even though I thought they were headed down, not up. And that's I've been working on a strategy for 15 years now. But I do not believe that dip buying will be a productive thing. Just like in Japan, if you bought the dip, you bought the dip. If you bought the Japanese market starting in 1989, not owning it, starting in 1989, and you bought the market going down, it took you 20 years to break even. I am not going to wait 20 years to break even. So I will not buy a 20% correction. I probably won't buy a 30% correction. I might buy something like Philip Morris or something. Maybe Rio Tinto. There's some that I might take bigger positions that I already own. But I sure as hell am not going to go buy the S&P with a 20 or 30% dip.
Well, Dave, awesome conversation today. Where's the best place for people to go who want to follow your work?
David B. Collum on Twitter. My pinned tweet is the thing that I write at the end of every year. So the one right now that's pinned is my 2025 annual review. I should give a plug. All 20 from 2009 to the present, 17 annual reviews are now at Amazon, which I've made essentially no money on, right? I did notice there seemed to be an uptick in sales this month for some reason, but they're all in book form. They've been more carefully edited and stuff like that. And so if you really want to get crazy, you can go buy the old ones. You can also find them online. They're harder to find. I had trouble finding them online. You find fragments of them and stuff, but a little disappointed in that. So a friend of mine, Bob Moriarty, who you must know well.
Yeah.
He spearheaded the whole binding process. He paid for the editor, for the copy editor. He did everything. And I just had to, I had to, of course, reread 4,000 pages of writing, 4,000 pages, and put in my edits and fix graphics and stuff like that. I did that last summer, and they're now all up.
That's awesome.
There's a plug. I bet you I'll make $100 off that.
Yes, well, I'm going to put a link in the description below to your books on Amazon so people can check out those year-end reviews in book form. Shout out to Bob Moriarty. I'll also put a link to your X account. Dave, as always, great conversation. Thank you for coming on.
You're welcome, and sorry for getting so dark on you.
Thank you for joining us today. Coming up this Saturday, the first live commodity culture boot camp, I'm going to show you how I vastly outperformed the S&P 500 over a 5-year time period, something achievable by only a very small percentage of actively managed funds. I'm going to explain my strategy, why it relied almost 100% on commodities, as well as give my forecast for how I see the commodities market performing up ahead. Go to join.jesseday.ca or click the link in the description below. June 27th, 1 p.m. Eastern Time, and I'll see you guys in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.